Unlike previous years, 2015 was a difficult year for most African economies. Oil-producing nations such as Nigeria were hit hard by the collapse of oil prices.
Slump in the oil price, in my opinion, yes, it will hit us in terms of revenues, because we know 70-80% of government revenue is based on crude. But also, we also look at the other side. The drop in price means that we also import refined PMS. So of course, the money we have to spend on subsidies to get these refined products in also goes down because the price in the international market has gone up.
Companies and people in general felt the blow of the economic downturn. Even the central bank devalued its currency, the naira, by 8%. In nearby Ghana, a struggling economy saw recurring nationwide protests against what they viewed as the government's mishandling of the economy.
The original source of our problems has been lack of discipline in economic management. In other words, that hyper expenditures, extra budgetary expenditures, all those things, single sourcing without going through the procurement law and all that has brought us to this stage.
But it was not all gloom for the continent. In June, representatives from 25 African nations signed an agreement to create a free trade zone. The pact will link 3 economic blocs and unite 57% of the continent's population. Unlike Kenya Airways, which suffered from a decline in its business, telecom operator Safaricom continued to expand its operations.
You know, at the beginning of last year, if you'd asked me when exactly would we roll out 4G and how quickly would we do it, I wouldn't have been able to say to you that by the end of the financial year, which was end of March, we would have rolled out 230-something LTE base stations.
Moving forward, the African Development Bank projects the continent will experience a 5% growth in 2016.